Now, before we get going, we'd like to remind you, please like, share, subscribe. Your support is appreciated, especially on something like this. And if you can share it on a global level, I think other people would like this outside of the U.S. So with that being said, jumping into U.S. products and exports. So gasoline still remains high for this time of year, but again, down 93,000 barrels to about 625,000 barrels a day, 16,000 above the 5-year average. That, again, it's a mixture of what is deemed gasoline and naphtha. There's a lot of demand for naphtha that remains in the system, or condensate in general, and that's something that's going to adjust a bit with some South Korean capacity coming back, but that's going to be something to watch in general. Distillate had a nice pop of 290,000 barrels, well above what we were expecting. But as you get new shipments coming into the Atlantic Basin, that's going to adjust some of that flow. And the biggest pickup was when you look at Europe, the ARB really blew open, and that allowed some of that additional movement from the U.S. That'll be fairly that'll remain for the next, let's call it next 2 to 3 weeks, which again also speaks to a reason why you're going to see some of the refiners try to produce more distillate versus historics, just because they're trying to take advantage of that. On the propylene side, or I should say LPG, dropped by 299,000 barrels a day, but still 255,000 above the 5-year average. That's going to remain strong. Another one that dropped again, when you look at that U.S. exports of crude, went from 2.49 to 1.9. So you had a big drop of 585,000 barrels a day. That's way less than what we were expecting. But you also had that makeup, because you had that shift where we continue to see a certain amount of demand that's shifting into the market. We think it's again going to settle out closer to 2.6, 2.8 as we go through the end of the year. The end of the year, just because we're not seeing that kind of demand, especially as we go into the end of summer. So here's where, when you look at the average in general, we expect it to get there, but it has to come down. It's the end of the month. You can see it's April 30th. When you look at previous, time periods, you usually get front loaded in the back, or you're usually front loaded where you get a lot of the exports coming out in the first week or two, or back loaded. And we've had a lot of back loading in a lot of these exports, and now we might get a bit more front loading. Not going back over 3 million, but could easily get back to that 2.8 fairly quickly, just based on what we're seeing. Now, when we look at some of the shifts, the issue right now is the Asian demand, because remember we've said that there's about a baseline of about 1.8 million barrels a day of demand, that just demand for what is in the U.S., coming out of the U.S., but above that is always fluctuation. And when you look at Europe and what Europe is demanding, where Urals are, where Dubai and West Africa is, hard to compete. And then you look at Asia, which in terms of COVID slowdowns, it's going to be hard to see more U.S. crudes heading that way, keeping us fairly capped. Now, and this is just proving some of that point. So China's bonded and domestically traded commercial crude stockpiles were at 31 million tons, or about 64% of capacity on the week ending July 28th. Now, that's little change week over week, but higher than late June, early July, where capacity was only 52%. So you had a big shift that we actually have more cargoes heading that way. You now have teapots that have essentially had to say, look, we can't resell. So you're going to get a big spike in that as OPEC increased their output by 780,000 barrels a day to 27 million in July. Production increased the most since August of 2020. Saudis made the biggest increase, ramping up by 580,000 barrels a day to 9.5 million. Latin America gasoline and diesel imports from as far away as Middle East and India increased to multi-year highs, with Mexico being one of those key areas. Now, the problem is we're not seeing the demand from the U.S., which the U.S. normally ships down gasoline, which is still elevated, again, going into both Europe as naphtha, Mexico as gasoline. So there's still some demand, but it's being met as well from other areas. Imports of clean petroleum product from India to Europe slid in July from the highest in more than a year. Arrivals dropped to about 390,000 tons. That's down from 470,000 tons in June. So again, you're starting to see that come down, but now we're actually seeing that pivot back up, and that will come into that basin again. So you're starting to see some of these shifts in general. Now, Saudi's made imports of clean petroleum product. We're expecting to see that come back closer to about 400,000 barrels over the coming months, over the coming few weeks. So then when you look at WTI Dubai spread, you can see that there hasn't been much movement made. Again, incentivizing more movement and more purchases from Dubai versus from the U.S., still at about negative $3.70, which you can see is still pretty far off of what is normal. So again, there's going to be some of those problems and incentivize more purchases from this other area, as well as you can see from Brent staying at something very similar. So Brent WTI still pricing its way out of a lot of these movements in the European theater. And now when we look at just what some of these gasoline exports, coming back into the 5-year average, we expect it, as we've said, to stay above the 5-year average, but stay within, the top of that cloud, if you will. So gasoline demand exports will remain fairly strong as we go through the remainder of the summer. Then when we look at distillate, we were expecting it to bounce back up to the 5-year average, but still stay below. So again, it's going to fall back down, but still remain back within the bottom of that cloud. Then when you look at crude oil exports, you got a big drop closer to that 5-year average. You can see that just how aggressive that drop was. But it's really meaningful when you look at it on the 4-week rolling average. So the 4-week rolling average is now at 2.72 million barrels a day, which is right in the sweet spot of what we've been talking about, between that 2.6, 2.8, right there. So we expect it to just kind of go sideways at this point and to see some support for keeping it within this level. As LPG drops back into the top of the cloud, again, still not going to see a huge shift as the demand still remains robust into the international market. Even though, and when you look at what Saudi Arabia has done, so Saudi Arabia has actually increased their price for LPG to fairly, seasonally adjusted record highs. So again, you're going to see that competition, and it's going to help support pricing because again, Saudi Arabia is increasing those prices in general. So while the U.S. had a build, GENSCAPE in Europe had a draw. So you had a draw of about 5 million. That's going to help offset some of the builds within the U.S. So then when you look at what's happened in Europe, within Asia, you had some builds. So net, we should have a build week over week. But as we've been saying with Europe, we think that we're just going to go sideways. Obviously, the swings are a bit bigger, but you can see that we're still going to work out closer to that 7-year average. Now, when we look at the prelim data coming from India, so you see just where we were versus 2019, diesel still remains a headwind. Diesel being the bigger problem when we're considering what the issues are on the economic side and what the longevity is of their recovery and how that's going to impact. But gasoline, again, right back to where it was, 3.6% above 2019. LPG never really went down, instantly stronger, and then jet. So between jet and diesel, you're going to have some of those headwinds. But when you look at general consumption, 10% of 5.4 million versus an increase of 3.6% of a 2.37 million. Get an idea of why diesel's so important, especially, again, that middle distillate side to see that recovery. And we're already starting to see some of that slowdown in India. Again, not crazy when we're talking about August, where you're going to continue to see some of that slowdown as we come through the end of this period. Now, when we look at what is happening in the international world, you can see some of the adjustments in flows. You can, when you look at July, you can see how weak July was. And when you look at just where the loadings are, because typically this is where we start to get towards the peak. And even though, and the reason why July was weaker is because we had deferrals. Now the deferrals have gone from August into September, because if you look at August, Angola has dropped a bit, Nigeria has dropped a bit, and we've seen the pivot over into September. So Norway is still fairly stable. We don't see that changing all that much. Russia We're seeing some pressure on some of their ESPO numbers, differentials still remain problematic. Libya is going to be at about 1.1, just below 1.1, still staying fairly elevated as we saw them keep their OSPs flat, which is net negative because when you put that on a seasonal level, they're actually fairly weak, especially versus 2020, where prices were actually higher in 2020 than today. So you're still seeing that competition into Europe remaining elevated. Saudi Arabia cut pricing into Europe. It's actually, when you look at the cut, it's fairly sizable, and it's now below where it was in 2020. They increased pricing into Asia. That's just, again, I don't know why they like to do things like this, but when you look at some of those movements, because Asian differentials have gotten worse, so you're going to raise prices, and Asian crudes or flows into Asia have been trading below OSPs, so you're going to increase OSPs. But again, some of the movements I think can be skewed in trying to keep this narrative going, because that if you put out an OSP, you can still sell it below or above, depending on how it is. But those are going to be some things to watch as we look at flows into Asia coming under pressure. And we expect to see an increase in floating storage, especially as the lockdowns and the port congestion becomes a bigger problem as we go through the remainder of August. So then when we look at some of the backdrops, ExxonMobil offered to sell 950,000 barrels of Paz-Flora crude at $1.65 less dated Brent. It was initially at $1.60 less dated Brent. So then when you look at, they withdrew an offer to sell Dahlia crude at $1.75 less than dated Brent, which was previously $1.50. Again, seeing that walk back as we go into the end of the month. Trafigura sells 100,000 tons of Urals. It was at $1.80 less dated Brent. Was initially at about $1.90. Urals sold, the Latasco sold Urals at delivery at $2 less dated Brent, was initially $2.35. Same thing, CPC blend was sold at $1.90 less dated Brent versus $2.25. So you're starting to see some of that come back. Now we're actually starting to see the Urals come back down and just essentially stay within this level as Libya is trying to get more competitive. And now you actually have the Middle East, and specifically Saudi Arabia, Iraq, cutting some of those OSPs into Europe to be competitive. Now, observed flows of Russian Urals crude to Asia dropped to the lowest in 4 months in July as a wide Brent to Dubai spread continued to dampen buying interest. Again, that's going to put more into the other markets. Urals differentials into Northwest Europe strengthened a little in early August, but are still weaker than early June levels. So again, you're still coming back down. Saudi Arabia, Kuwait and UAE boosted oil shipments to multi-month highs, even though you're seeing pressure on Iraqi exports. You're starting to see some pressure on exports. That's going to be something to watch, and we'll talk about that in a minute. And then Angola has yet to sell, West African oil for September loading is selling at a typical pace, while sales of Congo crude are somewhat slower than normal, according to estimates. Angola has yet to sell 10 to 12 cargoes of crude for September loadings out of 34. That's a relatively normal pace in general. 4 to 5 cargoes of Congo grade are still seeking final buyers out of 7, which is a very slow pace for this time of year. And then 20 cargoes of Nigerian crude for September loadings are seeking buyers out of 45, which is actually which is similar to recent months, but recent months have been much slower than historic. So you're still seeing a very slow purchase coming out of Nigeria. Congo, which is very odd when you look at, typically that's some of the first to sell. But at the same time, when you look at ESPO and Congo can typically kind of compete against each other. And when you look at those differentials getting worse, it just means that you're getting some of those issues. And then Iraq still has cargoes to sell, SOMO cargoes and other that just, again, are struggling to find a home. And it comes down to price. Nobody's willing to pay the price because we're just not seeing the same type of demand that the narrative dictates. So now when we turn to Fujairah, as we were saying, we expected to see a little bit of an increase in middle distillate, but we had a nice draw of light. So let's just break it down a bit for the different periods. So August 2nd, total product was at 18.747 million barrels, falling below 19 million for the first time since March. Stocks were at the last lower on March 22nd. Total stocks fell by 2.2 million, by over 10.5% week on week. Light distillates fell 1.6 million, which just offsets what essentially we had the previous week. This is a reversal of last week's gain when they were recorded above 7 million barrels for the first time. The gasoline market east of Suez found some support coming out of the U.S., but when you look into Europe, into Asia, you're starting to see some of that weakness. When you look at where some of this product is flowing, which is going to offset, but keep us fairly flat at this point. The question is going to be where do the exports come from, and then where do they go? When you look at the additional exports that are expected, especially coming out of China, stocks of middle distillate, including diesel and jet fuel, rose 477,000 barrels. To 3.136 million. That's a reversal of last week's draw of 709,000 barrels, the lowest since April 6th. Talking of shifting Asian gas oil supply balances coming from China as they're looking to move in, market participants said that a higher than expected gas oil exports from China as a result. Because remember, August was supposed to be down, but now we're starting to see that those estimates increase, which is going to put pressure on some storage. And then remember, we're starting to get into peak shipping periods, so we expect to see some of this additional heavy resid move lower as we continue to see kind of a steady build in light distillate and middle distillate on average, because it's obviously going to ebb and flow. But as we come into the back end of cooling demand in the Middle East, that's going to put some additional capacity into storage, especially on the middle distillate side. Now, when we look at crude oil on the water, we surged above the 5-year average, coming pretty close to where we were in 2020, and that's because we have more cargoes that have gone into motion, which again is speaking to some of the flows that we're starting to see going into Asia. The problem is it's going into Asia at the worst time when you look at where some of the demand is going to be, and how that slowdown in demand is going to leave this on the water. It's going to slow down the run rates, and again, because there's going to have that demand issue and they have this crude they're going to have to process, we expect to see an increase in exports of refined products, which is going to put more pressure on the product market after we've done a fairly good job of working through some of it, and now it's about to be replaced again. And here's where you can kind of see that, where oil in transit on a seasonal level is a seasonally adjusted all-time high. And when you look at oil in transit, is actually the highest in 2021. And this is going to be a bigger issue when you look at some of the movements as they go into Asia, because you had some stuff coming out of storage, you had some new product, and now it's going to go sit in storage, especially when you look at the issues at the port. And even though you have more product in motion, you can see floating storage is still at that seasonally adjusted high. We're right still at the high end of 2017. When you look at 2020, we started to see drawdowns. 2016, 2017, we normally get drawdowns, but as we've been saying, we're just going sideways, and it's because the oil in transit has been a big increase that took some out of storage, floating storage, but we expect this number to actually creep back higher as that oil in transit shows up, which is, I think, going to weigh on some of that pricing, and especially when you look at some of that front month crude. So then when you look at where we are on the product side, so European imports of refined oil product from the Middle East are set to climb to the 9-month high, as we've been talking about. But it still is taking time to show up, because we have a renewed surge from India. We have a renewed surge from the Middle East. But this is why, because you're very low when you look, and we're essentially at the lowest level that we've been at, or the next lowest level for 2021 on the gas oil side, where we had a draw of 17,000 tons. So then when we look at, we're about 2.87 million. We expect this again to grind back up, not getting back to the 15-year average, but still working its way back up. You can see gasoline had a draw of 76,000 tons, bringing us to about 795,000. So again, we're still working within and trying to adjust some of this capacity. So then when we look at gasoline, we're now back below the 15-year average. Just based on what we're seeing, and look at that 15-year average. Typically from July till November, you get a steady drawdown. So we expect to see something along those lines. It's just the draws are going to moderate. You're going to see a bit more of a flat line as the gasoline gets replenished from a little bit slowing demand, a bit more refinery utilization rate, and additional imports coming into the system. And fuel oil is going to get recracked into that when we look at RVO, vacuum gas oil, VGO. We expect to see VGO starting to get imported, recracked into gasoline, and fuel oil is something very similar. Now, when we look at Singapore had a small drop of 500,000 barrels. It was really driven by resid as we had a big increase in light. Now, one of the things that we've been saying is that we were going to essentially go sideways. We're going to come back to the low of 2021 and slowly grind back up and just go sideways from this point, which, again, we expect at this level. When you look at middle distillate, you had that nice drop. Now, because of the COVID side, China and that side, that we expect this to make a hard bounce higher and come back towards the high end of 2021. And something similar with light distillates, again, just going sideways, where we could have a little bit of an increase and then a little bit of a decrease, but again, just being fairly stable as we look at time spreads. So now you can see time spreads had a big reversal back to the lows that we had at the beginning of July, just based on where the demand is, where differentials are. We don't see this adjusting all too much from this level and kind of move sideways at this point. And now we're starting to see some reversals in December versus December across WTI and Brent. This is something that we think is going to continue to drift lower and come back to the lows of that early July as more pressure comes into what that demand is going to look like as we get into the December months, especially when you consider that OPEC is specifically supposed to continue increasing. They may about face, you may see them adjust. That is going to be something to watch as we look at the OPEC meeting. So then when we look at some of the spreads, so Singapore had a little bit of a bounce after some of the adjustments in differentials, some of that adjustment in storage. Still net negative, but again, still coming off the lows, especially as you see some of that pricing soften up a bit. But it's all relatively speaking, because when we look at the last 5 years, Singapore's Dubai hydrocracking refinery margins is still bumping against the lows, which is why on a net basis, you still have a net negative number when you factor in all the different pieces of refining. Now, Urals, same thing, a little bit of a bounce as you saw Urals weaken a bit, especially as you had less demand into Asia, which is putting more into Europe. And now you're getting more competition from both Libya and the Middle East, which again is going to keep some of this depressed as we go through the remainder of the summer. Now, same thing when you look at the Mediterranean. This is something that we expect a bit more competition, which will be a benefit for some of these, but you're still seeing some of the overhang as some of this is either very, very negative or semi-positive, but net, you're still continuing to see some of those pressures. Now, China's supertanker crude imports dropped, but dropped along the seasonal line. Now, when you look at what has happened so far, we expect to see this increase. And we're actually going to see this increase again at the worst time, especially when you factor in that the teapots have agreed that they're not going to resell some of this crude. So they're going to be forced to take it down, unable to resell. And that's going to put some weight on what their next purchases are going to be as we continue to see some slowdown. So when you look at Shandong Independence, this was down about a percentage point, again, moving a little bit lower as pressure mounts. Then when you look at the run rates on state refiners, Northeast picked up a bit, but some of the others remain fairly flat. So even though you have Shandong coming down, you're not seeing a big run up of the state-owned side. So you're going to see some of these pressures continue to mount in just what that oil demand is going to look like. So as refined product demand essentially nosedives, oil demand is going to follow suit, but you've already purchased it. You already have this product, so you're going to have to maintain some sort of stability on the run rates, which is going to put more product into storage and is going to result in a increase in exports. So then when we look at Asian floating storage here, you can see it creeping back up. And typically especially when you look at 2020, 2017, 2016, you typically have the drawdown. And what we continue to see is you're not going to draw, you're just going to go sideways at this point and still remain elevated. And if anything, at this point, we actually think you could get a fairly steep increase and actually test the 2021 highs because of the crude that's already in motion, what's going to show up, and what the issues are going to be at the coast. Here, when we look at North Sea, again, moving into motion, this is something that we think is going to actually start to reverse back up. We thought it was going to go sideways. Instead, it came back down. We think it's going to start to reverse back up, back to that 5-year average. West Africa is starting to increase a bit. That this is something that's going to continue to grind higher towards the top end of the range as more cargoes get moved onto the water. Middle East is the one that when you look on for 2021, you can see we're coming back into the highs of 2021. We're now back above 2020, back in line with 2016. This is going to be the one to watch because we see an increase in production. We have some pressure on exports and demand. So this is something that this is going to be a bellwether of how much OPEC is willing to adjust based on how big this number gets. Europe had a nice drop, but again, this is something that we think is going to remain fairly sideways. So we expect it to bounce back up, back within the bottom of that cloud. And then when we look at what has happened in Shandong, you can see that we had a small decline into the, finally, but that's something that we think is going to reverse back up and actually test the all-time highs as fuel oil continues to drift higher and still remain at these elevated levels. You should start to see maybe some recracking or at least some exports of fuel oil just to get it off and make room for some of that spare capacity, because you're getting some of these movements. As we get more information on what China is making the Shandong refiners do, we're going to have some more color as to how that's going to be impactful for some of the different pieces. So that's going to be something to watch over the coming few weeks. But if you have any questions, we love the back and forth. Please let us know. You can find me again on Twitter, email, or in the comment section. Sorry, I was traveling, so I haven't been able to respond to some people. I'll try to rectify that tonight. So look forward. I know you're going to be looking for messages from me. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.